Welcome to Markets Now. I'm Michelle Rook with Kent Beadle of Paradigm Futures. Grain starting off lower this morning, but at least the corn market's trying to push back into positive territory. We've got cattle a bit higher and mixed in the hogs. And of course, it's been an interesting couple of sessions here, Kent, with what we've seen with the meltdown in the stock market. That's back up today. So we'll talk about in a little bit what that means for livestock, but corn up for the third day here after starting lower. So has this been a money flow thing that we've seen because of the stock market, which has caused some short covering, or is there more going on here?
Well, there's short covering going on because of what's happened in equities. There's no doubt about that. When you see big losses in a certain sector, sometimes positions that are more profitable ultimately get liquidated in order to offset some of those other losses. I think we saw that a little bit on Friday and Monday, but I also think that, from a seasonal time frame, I think the funds are quite interested in not overstaying their welcome. This is the time of the year when the crop looks as good as it's ever going to look, just post-pollination. Obviously, we are going to have some crop tours, and we expect some, really excellent yield reports coming out of parts of Illinois and Iowa. But they're also going to see some areas that aren't going to be quite as good. Seasonally, crop condition ratings have a tendency to decline as you start to move later on in the season. And at some point, you have to concede that we're getting close to pricing in whatever this large crop is. And we're, currently on a cash basis, probably $1 a bushel underneath cost of production. It's true that there's been some liquidation of old crop supplies from the farmer, and that's probably been the seller to some of this short covering that we've had just the last couple of days. But we get into harvest, and this crop's going to get put away, and it might be pretty hard to buy at the same time that demand continues to run really, really strong.
No doubt. What about soybeans? Of course, we had a little bit better crop rating than expected. It went up 1%, and we did not get any confirmation of some of this rumored China business. Is that what's pressuring that market here today, or is this a product push lower?
Well, certainly the soybean oil is not helping. Yesterday and Friday as well, we had some weakness in the energy markets that pressed down on the soybean oil market, which was trying to recover here previously, but now is back down testing, multi-year lows. So that doesn't help. The crop condition ratings did improve a percentage point. Now, we're in the process of making yields at the moment, and we did have some decent moisture again through much of the belt last week that probably showed up in the conditions. Even in the north and in the northwest, where it's probably been a little too wet, we had some heat that probably helped the appearance of the soybeans, to be quite honest with you. We're still quite concerned about what some of those really short plants are going to ultimately be able to produce. But it's not surprising to me that we had another week of better conditions. Those will start to trend lower here, but usually they trend lower a little bit later in the season. So, we're getting, a number of things that are pressing down on the beans. As far as the China rumors, we don't expect to see at this time of the year, we don't expect to see Chinese announcements every single day. We had a couple late last week. I would guess that we'll have one or two this week as well. And, honestly, if we were to get the soybeans to turn a little bit further and start to violate some of the moving averages that we're still underneath, that might start to spur them to buy a little bit more aggressively.
Yeah, you got to feel like the pop the last couple of days, though, was maybe money flow, short covering, like you talked about in the corn market. So when we get up in those levels, it's hard to get much higher, though, because we do get some farmers selling against that, don't we?
We get a little bit of farmer selling. Now here, as I mentioned in the corn, underneath cost of production, we're probably $2 underneath that USDA cost of production level in soybeans. And these are not great levels. I guess where you're going to get some of that selling again is going to come out from that Iowa farmer and that Illinois farmer who have the ability to grow 70 and 80 bushel beans. If you can sell something against the carry, for example, and have those higher yields, you could probably still make some of this pencil. For the 30 and 40 bushel an acre guys up in the northwest part of the belt and on some of the rougher ground, this just doesn't work. And they're pretty uncertain about their yields anyway, so it's going to be hard for them to sell this market at this type of price.
Yeah. So the wheat market is back lower. We've got a higher dollar this morning. Plus, spring wheat harvest is progressing, so that's going to kind of keep a lid here on Minneapolis wheat, anyways, isn't it?
Yeah. So we saw a pretty good jump in South Dakota spring wheat harvest. It's kind of interesting that we were just doing the winter wheat harvest in South Dakota, and now we're getting some spring wheat harvest. And I almost wonder if sometimes the USDA gets confused there. But we have heard some pretty good early spring wheat yields in South Dakota. Washington State, on the other hand, also jumping ahead pretty significantly, and they've been very dry. And I think that crop got pushed ahead to maturity a little quicker than it might like to be. And some of those yields aren't quite as good. But on average, it's a good crop in North Dakota. Good to excellent category remained unchanged. There was one little uptick in the very poor category. So overall, the condition index fell slightly, but it's a good crop, and we're going to have it in the bin here in 3 to 4 weeks.
Yeah. Do you feel like the wheat market is trying to bottom, though? We, at least on the winter wheat side, because we did have higher weekly closes there last week, anyways.
Yeah. I had higher weekly closes across the board, and in Casey and Chicago, we did that coming off of contract lows. So I did like the technical action. We never did make new contract lows over in the Paris milling contract. We still have concerns about some of the European yields. The Russian yields may not be as bad as initially feared, but they're still not going to be great. And in general, we've seen good demand for U.S. wheat. Okay. Yesterday's inspections report was the third week of the last 4 where we were above the average needed to hit that inspections estimate. I think our export program is just going to be a whole lot better, and wheatness is probably going to be bought by the world importer. And some of that business is going to go to the U.S. this year.
And the cattle market back up here trying to recover, with the stock market trying to recover here this morning. So do you think that if we can get the stock market to stabilize, we can retrace some of what we lost here and maybe even get like October live cattle back above the 100-day moving average?
Well, I think we can. You keep in mind, we've got a large speculator who's long cattle. We've had historically high prices, and we've had them for a while. And we sort of dodged the bullet on this whole recession. And so to have the recession talk come back and to see what happened in the stock market, and to hear all this concern about the U.S. consumer at this point, I guess it's not surprising that we would see a little liquidation event in the cattle. But we still have a supply problem, and that supply problem is not going to go away very quickly. So, ultimately, I think end users, packers, what have you, long-term restaurant business, going to look at breaks in the cattle as an opportunity to get some product bought.
No doubt. And hogs the last couple of days felt like they were basically following the cattle futures, and maybe there was some concern about protein demand here with recession talk. But that market, what do you think? We've held together pretty well here with the cash and cutout. So can we stabilize that market as well?
Yeah, I think that we will stabilize that market. I think there may be one more run to the upside for hedgers to take advantage of, especially as you get out into some of the deferred contracts. I do think that, as consumers move down the value chain, if in fact there are problems with the consumer balance sheet, then more than likely they're going to take a look at pork as a pretty good value alternative. Certainly, they've done that with chicken as well, but I think pork is competitively priced and is going to find some pretty good demand at lower prices, and so it should be well supported.
All right. Thanks for joining us. Kent Beadle with Paradigm Futures. Remember, futures and options have substantial risk. I'm Michelle Ruck. This is Markets Now.